Today, I'm going to be showing you how I'm leveraging SoFi to build towards my retirement income and my retirement goals. And if you drop a comment down below on today's video, I'm going to send you my personal retirement guide, how I'm using 5 sources of investing and premium generation to build towards my retirement. These are going to be my primary sources of income, especially during my retirement year. So if you want that full ebook, no strings attached whatsoever, drop a comment down below. I'll personally send it to you, and hit that like button and that subscribe button. And of course, I hope you're having a God blessed day. Today, we're talking about SoFi, my plans for SoFi, especially in the coming weeks, how I'm going to be really getting back into it for building some income. Now, if you don't know the strategy I'm about to share with you, it's called selling options. And before you click away from today's video, I want you to just understand this is a different form of selling options that you have probably never even heard of before. So let me show you just quickly, high level, and then we're going to kind of talk a little bit more advanced. So let's say you wanted to buy 100 shares of SoFi today, right? Now, if you wanted to, you could go out there and buy 100 shares of SoFi for, let's say, $26.74, and you could spend $2,600, and you would have 100 shares of SoFi with a cost basis of $26.74. That's what most people do. That's probably what you've been doing up to this point in your life, and it's what I have done for many, many years before I learned the strategy that you're about to learn, okay? So what we can actually do that not a lot of people know about is we can say that we would be willing to buy SoFi, let's say at $25, $24, $20, right? 30 days from now, next week, right? We can say that and collect a premium from an options buyer. Hit the juice button, right? So let me show you what I'm talking about. So I'm going to go to trade options. I'm going to click sell a put, and then I'm just going to go, let's just go 26 days away. Okay. We're going to go 26 days away. Actually, let's do weeklies, whatever. We'll do 5 days, whatever. We'll keep it very, very simple. All right. Let's say you really wanted to get into SoFi and around the current price. This would be the strategy for that, right? So take a look at this, right? This is called the options chain. And all I'm saying here is I'm willing to buy 100 shares of SoFi, right, on October 24th, which is 5 days away from today. Obviously, SoFi is currently trading at $26.74 at the time we're recording this. Now, this is where we can select our strike price that we'd be willing to own 100 shares of SoFi at. So let's say, it's again, you'd be comfortable, you're like, what, I want to get it. I don't mind being close to the money here. I'll buy it if it's dropped to $25.50. Okay, so if I open up this contract right here, you would see that I would actually collect $56 of premium. So you could see that's credit that is given to your account immediately as cash that you can then, actually, I would say, reinvest it. That's what I'm doing with our live portfolio here on the channel. It's just another form of compounding, right? And it's literally you collecting income for saying maybe you would buy a stock. It's incredible, right? So with that said, right, let's talk about the risks because they're important to understand, right? Is that, let's say on the 24th, SoFi is trading still, over $25.50, right? It's trading still at like 26, 27 bucks. Well, if that happens, your contract expires worthless. Your money that was locked up to hold to buy 100 shares at $25.50 is returned back to you, and you can run the play the following week. Fantastic. Now, let's say in 5 days from now, on the 24th, right, SoFi is trading at $25, right? $24, $23. Well, you're on the hook to buy your shares at $25.50. That's why I always say, make sure you're doing this on stocks that you actually believe in long term and don't mind actually holding, right? You really get burned here when you get into stocks that you actually don't even believe in, right? So to show you guys how this all looks and how this all works out. We're strictly, today's video is going to be talking about the weeklies of it. This is my cash secured put premium calculator. This makes organizing yourself a lot better. You can get this calculator plus my full trade log, plus my cover call calculator in the second link in the description. Plus you'll be able to attend a workshop where we dive into all this stuff in a lot more depth, right? So what do we say? I said you're collecting $56, obviously not financial advice. These are just the numbers I'm seeing at the time of me recording. We're locking up $2,550, right? $2,550. Right? For an incredible 2.2% return in a month. Okay. Right. Actually 5 days, right? If we did this contract today. Now, obviously the annualized return is absolutely insane, right? I only like to look at that for purposes when I am actually, when I'm actually thinking about closing my positions out. But you could see a 2.2 ROI on your collateral. How am I getting this 2.2%? All I'm doing is dividing 56 by 25.50. So what's the strategy with the weekly? Well, with a weekly, essentially, our ideal scenario is that we don't get assigned, right? It's always a chance. Remember, there's always a chance you're going to get assigned. But essentially, we're just premium chasing and essentially writing ourselves a paycheck on a weekly basis, right? So for example, right, let's say you really don't want to get assigned. This is a slightly more aggressive play. Getting a 2% return in a single week on your money, I think we can all agree, is insanity, right? Just monthly, that's 8% a month, right? So be very careful, okay? I cannot stress this enough, right? Be very careful. SoFi's obviously been, on a tear, but also very volatile, right? But let's say we really want to like get a better price and we want to lower our risk a little bit more of assignment. Let's say the 24s. Now the 24s, we actually, funny enough, collect $24 on that, but we lock up less collateral. We're locking up $2,400. So if I go back over here, I put 24, I'm locking up 2,400, right? And I'm hitting a return of 1%. What's the ideal scenario here? Well, number one, you're going to have to figure that out for yourself. I'm not a financial advisor, but for me, when I'm doing weeklies on individual stocks, I'm targeting a 0.5 to about a 1%. The reason being is I'm usually trying to get a much better return as opposed to just doing monthlies and getting like a 2 to 3% ROI on my collateral. So I need to beat that. Otherwise, I'm just going to do monthlies. Let me show you what I'm talking about. In this scenario, I just assume best case that I'm going to be able to get about 4% ROI on my collateral every single month if I can do this trade weekly, okay? That means I'm going for lower deltas. I'm really trying to avoid assignment. It's going to happen. That's fine. But then we can do covered calls to make up for that. More on that in just a moment. But I want to show you guys the difference with the monthlies, right? So let's say we do monthlies. We'll go 33 days away here, okay? Now in this scenario, we can choose a better strike price. Now obviously the market's closed at the time me recording this, but you'll see, like for example, if we did the 24s, we're collecting $146, right, up front. Now obviously you're getting more because your money is now locked up for 33 days as opposed to only 5 days, right? So I'm gonna say 146 here, right, collecting $146, right? Now we're locking up 24. Look at that return. That's a 6% return. That's insanity, right? So in this scenario, which is the better way to go? The monthly. In my opinion, right? The monthly is tremendously better. Now we are locking it up for over a 33-day period, but for you to try to go and be like, hey, you know what? I'm going to do 1% a month. Even if it worked out for you, you would only be collecting about 4% a month as opposed to locking it up for the 2,400. Now there's a little bit more risk with that with that monthly, right? There is a little slightly more risk. I mean, it's a 29 delta, essentially a 30% chance of assignment here, right? So there is a little bit higher risk as opposed to the 24s that were expiring in a week. So you kind of have to weigh all these risks and benefits to yourself. Like I said, when I'm doing my monthly versus weekly, I'm going to look at both, right? Because this scenario here first, the weeklies, is going to require a little bit more time up front. It's just gonna, right? It's going to take more time. It's your management. You're a little bit more involved in the markets as opposed to if I just open this trade up, I can just open this trade on my phone and then I don't have to worry about it until the month. I can even do some good till cancel orders to buy to close my position out early if I want to, so I can free up my collateral sooner. There's way more on that in the second link in the description, guys. Watch the workshop or watch some of the other content here on the channel if I'm going a little bit too quickly here for you. But in this situation, me personally, I would go for this, right? I would personally go for the monthly option because that way I don't even have to baby this trade trying to go for like a 1%er every single week, which isn't even, it's only going to, even if it works out really well for me, let's just say it gets me even 5% a month or 5% for the month. It's still not beating out my return if I actually want to own SoFi at $24, okay? Now, the next thing we need to understand is timing and entries. Obviously, today the market is closed. I'm shooting this here on a Sunday. Go Birds, right? Now, with that said, why am I looking at SoFi right now? This is for those of you that tune in a little bit more on the daily basis. Well, you guys saw a few weeks ago at the start of October, right? I said, hey, I'm seeing SoFi. I'm expecting a bigger pullback here from SoFi. It dropped below its middle Bollinger Band area. Now, this middle Bollinger Band area is a good indicator of where we're likely to go. Now, again, all the indicators are fugaz, but when I looked at it over the past 6 months, right, SoFi has been on a tear and never even crossing below this middle Bollinger Band area. It actually dipped into slightly oversold territory. Now, it wasn't really oversold at all. People weren't like pouring out of it. Otherwise, the price would have continued to dump. But we did see a support around that 25 level. So what is my plan? Well, right now I want to see if we could test that 25 level again and where we go from there, right? If are the buyers going to step in once we get to this kind of like support-ish level around that 25-30 range, or are they not? If not, right, and we continue to sell off here slightly, I'm going to be waiting for SoFi to get towards this 24 level. That's going to push that RSI really towards that mid 30s area, which is going to create an insane opportunity on SoFi because it's going to start dropping, I would say, fairly fast. I would say if we start seeing it down to that 24, even 80 level, and it dips below that bottom Bollinger Band, I'm going to really be heavily focusing in, especially on our public portfolio that you guys see. I log all of my my trades here for y'all. If we start seeing that, I'm going to be doing cash secured puts like I just showed you, maybe even weekly at that point, if it makes sense, aggressive weekly. So I'm obviously beating the monthly returns. I'm going to be looking at like 17s. I like to be with my cash secured puts, especially on like stocks that have been riding high like this. I like to be between the 200 and 300 day moving averages on my cash secured puts. You guys know I absolutely love selling options on SoFi. Even in our trade log, that was the first way we kicked it off, right? When we were doing puts on it, or we bought 100 shares of SoFi, immediately started running covered calls on it. Eventually, we ended up selling our shares, and we really haven't been in SoFi here since really the beginning of July, but we've been having absolutely a freaking blast here on the public portfolio. So if you want this full trade log, you want all of my other calculators, obviously click that link in the description of today's video. There's also about a 2-hour training on the Ark Options Strategy, which I believe blows the wheel strategy completely out of the water. We combine 5 sources of income and premium generation. Really, that doesn't require us to be full-time traders or staring at charts all day. Listen, this ain't the channel for you if you want to be like a full-time trader. That sounds absolutely that sounds like a terrible place that I actually never want to go to. I'd rather live my life, work, business, faith, family, golf, literally everything else that I'd rather do than to be staring at charts all day. So if you want that and all these free resources plus some awesome training, click that second link in the description of today's video, guys. Remember, sell options, collect premiums, repeat. I'll see y'all tomorrow.